Good morning, Dirk. Very happy that you're here. The community will be very, very pleased that we have this interview today because you're working in a field that has been requested the most by far. You are a professional tax advisor. Welcome, Dirk. Happy to have this interview with you today.
Welcome, Axel. I'm happy to be here and say something about taxation in Germany with an international context as well.
We have a lot of videos about taxes in Germany, and we tell people that it's a good idea to file their taxes because it's not mandatory. And if it's not mandatory, it's probably because a lot of people get money back. That's why the government made it voluntary. If they made it mandatory, it would mean the government would get a lot of money back. But maybe not everyone gets money back. So the question is really, and that's a question the community asks a lot, who should file a tax declaration and for who is it really worth it? Because it is a little bit of work.
Yes, I mean, first, we have to get rid of one big misunderstanding. Filing a tax return is for most people mandatory, for most people who earn income. There are some exceptions, right, where you are not required to file a tax return. So basically, the three main exceptions are that you are earning below the basic tax-free amount, which is for 22 €10,347 for a single person. If you are married, then that amount doubles.
Where you pay zero tax.
Where you pay zero tax, and there's no requirement to file a tax return. The other exception is that if the taxes are already paid via a tax withholding, and that is usually if you are in employment and or if you have basically capital income, so income from dividend interest or capital gains from which a tax withholding is conducted, right? Which is usually done via German institutions. So that also means if you have foreign interest or dividends, there is no tax withholding for Germany, so then you are already in the requirement to file a tax return. If you are but that means that let me show you some examples. So if you are in employment, you have to file a tax return.
Yeah.
Right. That is if you have additional income. So that means you have employment income and other income from a small side self-employment or something like this, right?
So real estate, maybe rental income.
Yes, yeah. That's an addition. Real estate, yeah. Or if you are working as an influencer and have, let's say, you're on €1,000 a year, then you are required to file a tax return, or you give some yoga lessons or whatever, right? So if you are in more than one employment, so you have you work in your evening hours as an employed taxi driver besides your other job, right? But that is then when you usually, this is usually taxed at tax class 6. So if you are 1 in 6, then you are required to file a tax return. You're also required to file a tax return if you are married and you choose tax class 3 and 5, right? So then in any case, there's a requirement. Only if you choose for tax class 4, then and all the other conditions are fulfilled, there's no requirement to file a tax return. Then the other point is you have the possibility, if you are making losses, let's say from real estate, then you can have a negative amount put on your tax card, which lowers your monthly tax withholding. If that is done, you're also required to file a tax return. Yeah? Or if you received income which covers several years. So, for example, a bonus payment for 5 years, right, which covers 5 years. So that is usually the case if you are in a higher position at a banking institution. So there are special requirements for this bonus deferrals. Or if you received gains from stock options, or restricted stock units, which is a common remuneration or part of the remuneration in startups, for example, right? So then you are required to file a tax return. Yeah. So and that means that the standard procedure is there is a requirement, right? So, but if you are not required, right, because you were on tax class 1 for the year, you are single, no other income, no requirement, but you have the chance to file a tax return in order to deduct expenses, which will lower your tax rate at the end of the year, right? And this might be you have higher business expenses, right? So there's a general or a lump sum business expense deduction, right, which was €1,000 in 22, but it's now increased to €1,200, right?
The Werbekostenpauschale is the German, right?
Werbekostenpauschbetrag, yes, right? Or if you have special expenses, so like if you increase pension contributions, if you pay alimony to your ex-wife, if you make donations, if you pay church tax, just to name a few, right? Or you have extraordinary expenses. So that might be support of a disabled person, or your person are disabled, right? And then you get higher deduction, which you only can claim by a tax return. Or you have huge healthcare costs, right? Then that might be worthwhile thinking about filing a tax return. And one important point is that if you have received income just for part of a year, so let's say you studied and you start working on 1st of July, right? Then basically, since July, your tax withholding is done on a monthly basis. But with filing a tax return, right, then this 6 months income will be split over the whole year, which lowers your tax rate significantly and will lead into a refund, right? So these are basically some of the main circumstances when it does make sense to file a tax return.
Okay. One question to that: if I start working in July, would my first July payslip be as if I would have worked from January to June as well? Or do they account for that I only work for 6 months this year?
The tax is calculated on a monthly tax table.
Okay.
Right? So
they deduct basically twice as much as they should, roughly.
With looking at the end result, yes. But of course, the monthly deduction, the monthly table is correct, because your employer does not know if you just changed the job and had a job for the first 6 months, or if you were doing nothing.
Yeah.
Right? So the employer is required to withhold taxes on a monthly, according to the monthly table. There's no way out of it. But as I said, with filing the tax return, that will be leveled out. Yeah. Another point is, which is important in that context. So if you move to Germany, right? Let's say you worked, let's assume in France, at the first half of the year, and you're coming to Germany 1st of July, then the same applies. However, in this case, you are required to file a tax return, because the income which you earned in France in the first half of the year has to be declared in Germany as well, and will influence your tax rate in Germany. And that is called the progression clause. And if your progression income is more than €400 a year, or 410, then you are required to file a tax return. So, and then it basically depends on if your French income was higher or lower than the income in Germany. So if the income in France was higher, then it will increase your tax rate. So it's not clear that you receive a tax refund. It might be a tax payment, which you have to do. If the income was lower, then it might be a tax refund, right? So it might be level out anyway, because in the year of your move, you might claim some more expenses like double household or moving costs and so on. That this progression clause will be mitigated at the end of the day, right? But important for you is have to file a tax return, irrespective of the outcome, if it's a refund or a payment.
The number that we found online is that the average income tax return is 1,072 euros from Finanzamt. Some get a little more, some get a little less, some have to pay, but apparently 9 out of 10 get this number. And now we have a lot of comments. We also got one yesterday writing, "What the hell, so much? I got 8 euros back last year." What could be the reason for that? Why is apparently our community getting so little, while the average is more than 1,000 euros? Do you have an idea, or maybe some tips or tricks for people?
Okay, so the tax refund, which is stated by all these online providers and so on, that's a statistical value coming from the year 2018. So to understand it a little bit more, so more than 12 million people received a refund, but also 1.5 million people had to pay. And they had to pay on average more than 1,100 euros. But as it is a statistical value, you have a lot of people who receive a higher refund than the 1,070. That is due to they have losses from real estate. They probably have lost carry forwards. They have high business expenses. They have high special expenses. For example, they pay their private health insurance, so the contribution for 3 years at once and get the deduction. So then the next year the deduction is a lot lower, but that it's a lot, right? And if you have a lot of people with a deduction of 10 or 15,000 euros, then the deduction, of course, for the other ones is lower. And it's basically the most the number is that you have a refund between 100 and almost 1,000 euros, right? So that is what you have to be in mind when looking at these numbers, right? So and of course the difference in the tax refunds or tax payments lays always within personal circumstances and the personal situation, right? So it depends on the family situation, if there's additional income, what deductions are possible, right? And therefore, I often hear the argument, my friend is doing the same job, they always get more money back from the tax office. They might have the same job, but they have clearly different personal circumstances, right? So, and what are the differences? So, what basically is decisive for the tax refund, right? So, and basically we can divide it in 4 categories, right? So the one is business expense, right? So your friend is doing the same job as you, but his commute is 40 kilometers and your commute is 3, right? So that is already a huge difference in the expenses what you can deduct, right? So the deduction for commute is 0.3 euros per distance kilometer. And if it's more than 20, it's 0.38, right? So times usually 15 days per month, right? So then what is with work equipment? Does a person has a home office? What is about contributions to professional associations or trade unions? right? Then where there are application expenses for a new job, office equipment, basically to buy some stuff to furniture your home office, for example, right? Business clothes, double household expenses. Your friend might have a second household, right? So he's living, let's say, in Munich or still in Paris or whatever, and has a second home here in Germany. Then he can claim 1,000 per month an expensive for the double household, so for rent, utilities, and so on, right? So then training costs, right? So your friend might take professional training or coaching, and this can easily sum up to a couple hundred or even €1,000, right?
German courses, maybe? Is they also included?
That depends. That is really if there's a real focus on business. So let's say business German, for example, right? Then it would be deductible. But if it's a course to get general German language speaking availabilities, then it's not deductible because that is basically for living. I mean, that is that you can live in Germany, right? But with a focus on your business or technical German for engineers or something like this, that would be deductible.
Okay, nice.
Right. So then telephone and internet costs. So moving expenses. Let's say in the year you're coming to Germany, right? So yeah, there are real expenses deductible or also some lump sum amounts, right? Or accident costs. So if you are on a business trip and you have an accident and your car is crashed, right? And you have costs involved with that. So these are all professional expenses which would be deductible, right? And if your friend has a lot of them and you do not, then of course there is a huge difference in the tax refund.
Yeah. You also mentioned home office. There it makes a difference if you have a desk at home or if you have a separate workroom, right?
That is right. So there are basically two ways, right? So one is the lump sum deduction for home office, which was introduced during the Corona period, right? Which is limited. It's €5 a day for 22, right? And a maximum €600 per year. So that means if that is all what you have on business expenses, it does not matter because it's below the tax-free amount, so the Arbeitnehmerpauschbetrag, right? So, but if your home office is first, it has to be a separate room, only used to work in there, right? So if you have TV in there, you're dead, right?
So no living room, because I know the community, they always try to exploit if they can. Living room or bedroom doesn't work.
That is right. You have to have a writing desk, a chair, a bookshelf, right? That's it. I mean, even a couch is kind of might cause problems, right? I mean, but important is it has to be a separate room, and it is usually only accepted if that is an extra room. That means they say if you are a two-person household, you have to have 3 rooms to claim a home office, right? So if you have 2 kids, so 4 persons, you have to have 5 rooms, right? Because otherwise they say that's kind of living, it's a kid's room or whatever. So the second point is that you only can claim it if it is either the center of your work. So basically, if you are self-employed and you're working from home, for example, right, then that's clear, and then you can deduct all costs. There's no limit on it, right? If it's not the center of your professional activity, like for a teacher, right, because the teaching is in school, but he needs a desk to prepare for the lessons, then it's limited to €1,250 per year, right? So, and of course, the other precondition is there is no other place where it can be done, right? So, there is no desk in the school where he could prepare for his lessons. So, these are basically, in a nutshell, the rules for for home office.
Why complicated?
There's the saying that the German tax law is one of the most complicated ones. Okay, so then that was one. The second one is special expenses, Sonderausgaben. So what are special expenses? So that first health insurance and pension contributions, right? So if you are employed, that's an obligation anyway, right? And that's usually already deducted by the payroll. Still, and we come to that in another video, you can voluntarily pay more into a pension contribution, right? So which will basically increase your deductions, but it's not yet reflected in your tax withholding. Right? And of course, if you are self-employed, that there's anyway no tax withholding. You anyway have to file a tax return and you can claim these deductions. So what else is special expenses? Donations, right? Donations and also donations or membership fees to political parties, right? So important for donations is the donation has to be to a German or at least European entity. So, for example, so if you are donating for the World Wildlife Fund, it has to be to World Wildlife Fund Germany, not the US. So if you have, let's say, a permanent wire transfer to World Wildlife Fund to a US entity, it's not deductible, right? So pay attention to it. You might think then about how you donate. So church tax. So if you're a member of a church, you have a church tax withholding in Germany, and you can deduct the church tax.
One question about the donations or sending money abroad, because we get this question sometimes from people if they, for example, support their parents. I think, but I'm not sure, if you would support your parents in Germany, then I think there's some tax things, but you know better. But what if, for example, if my parents are in India, does that work too?
That might work too, but that's a third point. That's extraordinary burden, and I come to that later. Okay, so then contributions to a restock contract would be deductible, or alimony payments to a separated or divorced wife up to special amounts, so which is almost 1,400 euros, but the other conditions have to be considered. Then vocational training, so that means costs for your first professional education, erste Berufsausbildung, but maximum 6,000 euros a year. Then school fees for kids, if you are sending your kids to a private school, 30% of the school fee is deductible, but maximum 5,000 euros. And childcare costs, so costs for kindergarten, for example, or for a babysitter, 2/3 of it is deductible, but to a maximum of 4,000 euro. And renovation costs for an owner occupied or rental historical building. So that's kind of special. It's just complete, yeah, right? But also, especially with the childcare costs and for a babysitter, I mean, other conditions have to be fulfilled. I mean, there has to be an invoice, and it has to be a wire transfer. So if you give the daughter of a friend of yours 50 euros cash into the end, so that's not deductible.
That doesn't work.
Yeah. So then the third point is extraordinary burden. So these are first lump sum deductions for disabled persons, right? Then there's a lump sum deduction for children in education which are living away from home, so living separately, so have their own flat. Then sickness costs, right? So that means, I mean, this is for the costs for sickness or glasses or some dental prosthesis or something like this. So that might be expensive. So that is deductible, but only if it's called reasonable limit is exceeded. So, and that what is reasonable, that is determined and is depending. It's a special percentage. It's between 2 and 4% of your income. But what the percentage is depends on how the amount of your income, so how much you are earning, and the family status, family size. So if there are kids to be considered or not, right? So it's a little bit complicated, and to be honest, that for sickness costs that usually only comes into account if it's a couple hundred or even €1,000. Right?
So if you would be a single person making, let's say, 100K, so big income, and you buy new glasses for €100, then that's probably not gonna work.
Forget it about it. Okay. So in this case, the reasonable limit is, I guess I have to look it up. It's 4% or something like this. But from 100,000, I mean, then you have already 4,000, which do not count, right? So, yeah. So and then support of parents, for example, right? So if you are required to support them because that's the only source of income they have, like because they are living on a village in India. That might be possible, but it's it's not easy to get the deduction because first you have to wire transfer the money, so you have to prove that you really supported them, right? So that money goes from here there. Then you have to get a confirmation from the foreign, so let's say in India, official institution that they do not have any income and that they do not get any governmental support. So that you really have to support them. There are forms available, but to be honest, to get acceptance by the German authorities is not that easy, right? So, I mean, a stamp from India, I mean, that could be anything, right? So, as I said, it's a complicated process. The deduction is limited anyway, and you really have to think about if the effort you have in getting this deduction, it's really worth it.
Okay.
It's a lot easier, let's say, within the EU, right? Because it's more aligned, but that you have parents within the EU who do not get anything, that's also very rare, right?
Yeah.
Yeah. So the result is it's possible, but it's complicated.
Okay.
And I have, from my experience, I have basically no clients who really go that way, right? Because it's too much effort. So, and then the fourth point are basically other tax reductions. So, what is that? So, one is tax reduction for energy saving measures in buildings used for own residential purposes. So, if you have your own house and you do something in order to support climate saving, right? And the other one is, and which is more common, and basically everybody has, is tax reduction for expenses for household-related employment or household-related services. So, like cleaning, right? You have somebody cleaning your house or your home, and for craftsman services. So, if they are repairing your dishwasher or you're renovating your house or your apartment, right? So that 20% of the costs are not deductible. They will be directly offset against your tax liability, right? Of course, there are preconditions. It has no cash payment, right? So wire transfer is necessary, and you have to have an invoice, right? So, and as I said, basically everybody has it. So if you have rented an apartment, then you get at the end of the year, or usually the mid of the following year, you get a final invoice.
Nebenkostenabrechnung, yeah.
Yeah. So, and the landlord is required to state these expenses, which are called expenses according to paragraph 35A income tax code. they have to issue a certificate that's all stated, and you can basically take these amounts, put it on your tax return, and 20% of that will be offset against your tax liability, as I said. Right? So, and if you are owning an apartment or a house, then you have repairs or some maintenance services on this house, which you then except you do it by yourself, of course.
Yeah.
Okay, so that's these basically are the 4 reasons why tax refunds are usually different per individual. Right?
Okay.
So
So as always, it always depends. That's what the community law. So they always say it depends. But in this case, it's true again. It depends on your personal situation.
that's right. Yeah.
Earlier, we had this comment about the person only getting back €8 with Taxfix. And that's basically the next question about these tax software providers. We have a couple of different ones. We also made videos about them that allow you to file your taxes super easy in English from home. But sometimes we get the feedback that it's not so easy to do it all by yourself, because maybe you don't know what you don't know as a non-tax expert. So what I want to know is, what's your experience or your opinion as a professional tax advisor on these software providers?
To start with a joke, the problem always sits in front of the computer, right? But besides that, I cannot do a comparison of all these programs and tools, right? And of course, I try to lure someone to their tool with these to get 1,070 on tax refund, right? And they do not tell you really that's just an average. And of course, it's, as we have discussed in other videos or before, it depends on the personal situation. So, from my personal point of view, right, these programs or tools only make sense in simple cases, right? And and if people just have the usual deductions, right? But it does not really help in cases where you have foreign income, complicated investments, and so on. Because what these programs do is they take basically what is usually, right? They ask all these questions, but they do not tell you think about that and think about that. They do not explain you the rule, right? So they are supportive, and there are cases that they might be helpful, and yes, they are cheap, right? Relatively cheap, but they are not. You cannot use them instead of a tax advisor. So if you really need advice, and then you should go a tax advisor. So, for example, what you could do, so what I also basically advise my clients. So, if you're coming to Germany and it's the first year, let's do it by a tax advisor. Then, the first year is it's almost a complicated one. Second, you have the most deductions possible, and you see how it's working, and then you can think about, right? Does it make sense to switch to such a tool? Because then you have the first year as a blueprint, and then you can go from there, right? Or you are that happy with your tax advisor to say, okay, that's worth the money. Of course, the first year also for the tax advisor is more complicated. He has to gather more information. It's probably then also more expensive than if you would do it in the following years, right? But it's a personal decision, right? People there can very well do with these tools, others do not. The biggest problem, what I see in using these tools, is that you might forget deductions, right? Then it's basically, okay, what do I forget? What is the cost for the tax advisor, right? That's a question you do not know.
Yeah.
Right?
And then they're not so cheap anymore, right? If you forget €1,000 in tax deductible costs, then they're not so cheap.
That is right. They do not tell you so what to do with foreign income, right? So with the allocation of the taxation rate with foreign income, right? So these programs do not really deal with double tax duties, right? So and therefore, basically, then you would need a tax advisor. So my recommendation would be, if you still have foreign sources, I would rather at least for the first time go to a tax advisor. So then, if you are working as a freelancer, right, and then there are bookkeeping requirements, right? You have to do a profit and loss statement, right? There are also online tools available, right? So they say you just scan it and you book it.
Mm-hmm.
That works in 90% of the cases. But I mean, I have a lot of clients using these programs. So what I basically do is I said, do it. I have a look at it. And then I tell them, okay, that was a wrong booking. This is wrong, right? I mean, like it's a professional insurance, right? So he thinks it's a liability insurance, but in fact, it's a pension insurance, right? Complete different tax treatment.
Yeah.
Right. So, but that's what the program does not tell you, right? So then, but that's a way you can save basically a monthly cost, but you have then costs for a tax advisor to look at it, right? So that at the end of the day, it's correct what you have booked there, and that your profit and loss statement is correct.
I think also for business owners, myself being one, I want to concentrate on the business, that it makes more money, and we have a tax advisor that takes care of all that stuff. And I think that's the same for employees as well. That's at least how I handled it back when I was an employee. I'd rather have an hour of spare time instead of handling my own taxes and have a professional tax advisor taking care of it.
That is right? I mean, and of course it depends on your business. If you have just like invoices, then that might be okay, right? So, but it's always personal judgment, right? And what, of course, where these programs do not help is if the tax office deviates from your position, so what you have filed. So that the taxes assessed by the tax office is different than the one the tool has calculated.
Mm-hmm.
So, and then you are either at your own or you have to go to a tax advisor. For the tax advisor, then the difficulty is he has not filed the tax return, he does not know the case, he has to work into it. So, what you probably have saved, you spend now in getting it right with the tax office.
So you have to work and you have to spend the money, okay?
So that might not necessarily, right? It might be that it's accepted, but there are deviations, right? There might be also deviations which are okay because you use the tool not the correct way or misunderstood some question of the tool and basically put in a wrong amount, right? So that might be, but you as a person with no experience in taxes might not know that, right?
Then you have it, what you said in the beginning, that the problem sitting in front of the screen.
Yeah, and then it's also important that if you use a tax advisor, the costs are deductible as long as they relate to your income. So the tax return basically consists of different parts. So the general tax return preparation is not deductible, but what relates to your employment income, what relates to self-employment income, what relates to rental income, that is deductible, right? So at least part of it will then again lower your taxes.
All right, then let's end the video with the two most common questions that we get. The first one being tax classes. People make in the comments and in meetings with us, they make a huge deal out of it if they're tax class, not if they're single, but if they're married, and especially if their spouse is maybe not living in Germany or in the EU. So can you help the people choose the right tax class?
First, we have to say that choosing the tax class does not have an influence on your final taxes, except that if you are married, you have tax class 404. Then, and you are working the whole year, no other income, then, as we said in the beginning, no requirement to file a tax return, right? Because then basically every partner is treated as a single tax deduction, you are done, right? So if you choose tax class 3, 5, then you are required to file a tax return, which means that choosing the tax class is basically a cash flow topic, and not a topic about final tax liability.
Okay, just one more. Let's get things straight for people. A married couple with 4 and 4 is basically as two singles with 1 and 1.
That's right.
Okay, just to make sure everyone gets it.
Now, and for them, it might be advantageous to file a tax return. So let's say one has a lot of deductions, which lowers the tax rate, and then then you have to basically look, and that's what a tax advisor would do. A tax advisor would file the returns and would look what is more beneficial, filing a joint return or filing a separate return. And that, again, that is then depending on the different circumstances, right? So like a clerk, so a person living in or working for a governmental institution has other deductions as somebody with usual employment, but the tax advisor would look at what is best, right?
Okay.
So if your partner is living abroad, right? So then in special circumstances, you can choose tax class 3 for yourself. I mean, there's no tax class for the other partner because there's no employment in Germany, so that goes into nothing. And that is why it's complicated. And it's basically only possible if first, you are EU citizen. Second, your partner is living in another EU or EWR country.
Okay.
Right? So then it's possible. And then again, you are required to file a tax return because then the foreign income of the other partner is to be declared as well. It will not be taxed. It's just important to determine the tax rate. That's important. That's a progression clause we talked earlier about. And with filing the tax return, then also you need a confirmation about the income of the other partner from the other country and so on. Right?
Okay. So basically, if somebody from India is watching, where most of our expats are coming from, and they came to Germany, they're married, and they came to Germany this year, they want to file the tax declaration, but the spouse is maybe coming only next year. There's no tax class 3 for these.
No, and then that first year they have to file as a single person.
Okay.
I mean, important is that if the intention is anyway that then the spouse comes over to Germany, and if she comes or he, 31st of December, that's enough. 1 day is enough.
Ah, little tax trick. Okay.
Yeah, that's a tax rate, right? So has to be at least 1 day resident of Germany.
And then you would be getting the tax benefits basically for the entire year.
That is right. So then you can then you are able to file a joint tax return for this couple, right? And then if the spouse didn't have any income in that year, so then there would be then a huge tax refund.
Okay. So bring your spouse by December 31st instead of January 1.
Yeah, the latest. I mean, of course, a little bit earlier is better, but yeah, 1 day is enough.
And second most asked question is about foreign income. We have one on the screen here. If with the Freistellungsauftrag, the 1,000 euros tax-free capital gains. If you have this, and many people have brokers from outside of Germany, and sometimes even some creative people have the idea to not declare foreign income. What do you think about those two types? If one has foreign income, and maybe if someone thinks he doesn't have to declare it because it's not made in Germany.
Bad idea. Because if you do not declare your income, which has to be declared in Germany, that is tax fraud, right? So, and there are penalties on it, and huge penalties, and depending on the amount, that can even lead to coming into jail, right? But not if you do not declare a couple of €100, but you have to declare it, right? So there are, let's put it this way, right? If you are a resident of Germany, you have to declare your worldwide income in Germany. Worldwide income means irrespective of source. So if you have brokerage accounts in the US, in China, in India, France, UK, Germany, right? The income received out of that has to be declared in Germany. Only in cases where you might have a dual residency. Let's say you keep your residency in the UK and you have a second one in Germany. We have to look into the double tax treaty where your treaty resident is, right? And the treaty resident is usually determined. So where is your center of vital interest? So center of vital interest is basically where are your main economic and social contacts, right?
Is this 183-day rule?
Has nothing to do with that.
Okay.
Nothing. 183-day rule is a clause also in the double tax treaty, but that's referring to employment income.
Okay.
Right. So that's a complete different rule, and that's not to be discussed here. But you are a resident in Germany or treated as a resident in Germany if you have an apartment here where you live in, which you basically can use on your own. You have rented it or bought it. Or you have a physical abode in Germany, which means you are here for an uninterrupted period of at least 6 months, right? So then you are treated as a resident. So, and then, and as I said, if you have two residencies in two countries, then there are criteria in the double tax treaty, as I said, center of vital interest, where your treaty residency is. And usually, all income, yeah, or the right to tax the income according to a treaty is usually allocated to the country of residence according to the treaty. So if we take my example, so if you have two residencies in the UK and in Germany, and according to the treaty criteria, your center of vital interest is in the UK because you're in Germany just for 1 year on assignment. Your wife is living in the UK. Your kids are going to school in the UK, right? Treaty residences in the UK. That means that also your other income will be taxed in the UK. Employment income is different, right? That's basically where you perform the services. But interest and dividend would be in the UK, not to be declared in Germany.
Mm-hmm.
Right? So, but let's take the most cases that your center of vital interest is in Germany or your only residency is in Germany. You have to declare your worldwide income in Germany, right?
Even if it's negative, does it help you?
It does not really help you. Let's put it this way. So if you have losses from capital gains, yes, you have to declare them. They can only be assessed against other capital gains, not against employment income, right?
Mm-hmm.
But let's assume this year, or let's say in 22, you had losses from capital gains, right? So then you declare them. Then it's stated as a loss carry forward for the next year. And if in 23 you have capital gains, then you can offset these gains against the losses from the last year.
Mm-hmm.
So that works, but not against other income.
Okay.
Right? So therefore, it might make sense. Right? Then another important point is, which I come across a lot, is if you are invested in foreign mutual funds.
Mm-hmm.
That is, from a German tax point of view, a problem. Because mutual funds are only accepted if they are allowed to conduct their business within the EU.
Okay.
right? So if you are invested in US mutual funds, they are not qualified according to the German tax rules. That means there's a very disadvantageous tax regime with basically a penalty taxation. So the tax is the tax is the usual tax rate, but the basis what to tax is calculated in a very complicated and disadvantageous way. So that's therefore my recommendation basically is get out of mutual funds in the US or somewhere else, out of the European Union, in order to be on the safe side. And by the way, that works the other way around as well. So there are financial products in Germany which are not accepted in the US and have a complicated and high tax treatment in the US, right? And as a US citizen, as a US citizen, you have the right and obligation to file your US tax return irrespective of where you are, right? So and also green card holders. Right? So therefore, this is very complicated, and of course, then recommendable to talk to a tax advisor how to deal with such situations.
Yeah. Just to make sure everyone understands, that doesn't mean that you can't invest in the US. You can invest in the US, but with European ETFs or mutual funds. So they should have an ISIN or a UKN, is what the German one would be, and not these ticker symbols.
That is right, and of course you can have a US depot where you have shares. So if you have, let's say, Apple, IBM, Ford Motor Company shares sitting in a US depot, that is fine. Dividend distribution has to be taxed in Germany. However, that's another important point is that also according to the treaties, the country of source has the right to withhold a little bit of taxes. It's usually between 5 and 10%, right? But these taxes will be credited against the German taxes because they are levied in line with the tax treaty.
Okay.
But what might happen is that you have an excess withholding in the source country, right? Because the systems are too complicated or you forgot to mention them, and then you might have that excess holding, and that has to be claimed back then in the source country with the procedures applicable in these countries.
Understood. It's an excellent bridge for the next video where we talk about more in detail about taxes and investments. But before we wrap up, one more question, because I know the community and I know that they exploit what they can exploit, basically, if they're very street smart, let's say. And I know that a question a lot of them will have is that if, for example, I have a real estate in India and I make rental income in India and it stays in India, then their argument will probably be that they make no foreign income because the income stays completely in India. What does or you as a tax advisor, and what does Finanzamt say about this? Do they follow the same logic, or would they say no, this is still income that you're making?
First, it is income what you are making.
I thought so.
But again, you have to look into the treaties, right? And into local rules. So basically, there is one big distinction. It's between real estate earned within the EU. So real estate located within the EU and real estate outside of the EU. All tax treaties basically state that the income from real estate is taxable in the country where the real estate is located, which is in India. So therefore, it's correct, it has to be taxed in India. But in Germany, since it's foreign income, but according to the treaty text in Germany, the exemption from German taxation will be granted, but that income has to be considered for progression purposes. That is what we have talked about earlier.
Yeah.
The income will determine the German tax rate, but only if it's positive. If it's negative, It has no influence, right?
Okay.
But positively, it influences the tax rate. That rule does not apply within the EU. Within the EU, we can neglect it. Except there is a clause within the tax treaty, like we have with Spain, where it said no exemption with progression, but Germany has also the right to tax it, but will credit the Spanish taxes. Right?
Okay.
So it's always you have to look where it is, you have to look at the treaty and then to the local rules.
Okay. So I definitely learned something, and I think a lot of people watching too, that worldwide income can have two different effects. One is, do you have to pay taxes in Germany or not? And one is, does it account to your income, which is the progression that you mentioned?
Yeah.
Okay. If people have further tax questions, Dirk, how can you help?
I mean, of course, you have to contact me, right? And then basically what I do is I conduct a Zoom meeting for a quarter of an hour to get to know the person, the requirements, and the topic and the expectations. And then tax advice has a lot to do with trust, right? So both parties, so you and I have to say, okay, we can work together, right? It does fit, right? And I have the trust in that person, right? And then based then on the information I get from the interview, then I can basically talk about the process, how it works, and of course also about the fees. What does it cost?